If you've been looking to buy in the Dallas-Fort Worth Metroplex in the last several months, there's been two primary frustrations that you've run into. The first one being the rising home prices. It just seems that although there's less competition, the prices of the homes continue to rise. And here's the very well-known secret. They are. Now, the second frustration for you as a home buyer is that the interest rates are rising as well. It wasn't but a couple of months ago that the interest rates were in the 2s or 3%, and now they're over 6%. So if you were approved for a home loan a couple of months ago, now your purchasing power is less. However, there is hope. I want to share with you the strategy that's going to allow you to get into the home that you want for a much lower interest rate and paying less every single month. But first, allow me to welcome you to the DFW Homeowner YouTube channel. My name is Jaime Resendiz. I'm a realtor and team leader able to help you make money in real estate regardless if you're buying or selling. Now, here's how you actually compete in this real estate market of rising prices and rising interest rates. You as a home buyer will ask the homeowner, aka the seller of the home that you want to purchase, to do what's called a seller paid rate buy down, which essentially a rate buy down is a way for a borrower to obtain a lower interest rate by paying discount points at closing. Now, these discount points are also referred to as mortgage points or prepaid interest points and are a one-time fee paid up front. In the case of discount points, the interest rate is lower for the loan of the term. So you heard that right. It is absolutely possible to lower the interest rate that you get quoted. And it's absolutely possible that the seller will actually pay that for you, especially in the real estate market that we're in now and about to get really into in the coming months, where the sellers actually have to compete for you, the home buyer. Before, they couldn't care less because they had a lot of home buyers really competing extremely hard to get their home. So here's how the seller paid rate buy down actually works. So let's just say you found a home in Frisco, Texas, and it's priced at $500,000, and that you're putting 5% down, which will make your loan amount $475,000. Now, at the time of this recording, interest rates at 5.5% are actually realistic, and your term is going to be the standard 30 years. Now, assuming all of that is correct, along with some additional assumptions, your cash to close is going to be roughly $32,000, meaning that when you're at the title company, you need to have a cashier's check in this amount, which means that your monthly payment is going to be just over $3,100. Now, we're not going to worry about the 4 remaining rows in this column. Let's go to the next scenario. In this coming market, price reductions are going to happen. We're seeing this far more often than we have been in the last couple of years. So if the home is not selling, then the homeowner will be forced to do a price reduction. So if the homeowner lowers the price to $480,000 and you're still putting down a 5% down payment, then the loan amount that you're taking out now is $456,000 with the same interest rate of 5.5% and the same term of 30 years, but just a bit less cash to close. Your monthly payment now is just over $3,000. So that means that you are saving $125 a month. However, the big hurdle is that the seller would have to reduce the price of the home by $20,000. Now, here's the thing. In this market, don't expect home sellers to be that aggressive with their price reductions. Also, the cream of the crop, aka your dream home, may have enough demand that they don't even need to drop their price. So in this scenario, you're still priced out. The price of the home is too high for you at the moment, and the interest rate precludes you from purchasing the property. But here's the other way. This is where the seller paid rate buy down comes into play. The seller can keep the purchase price still the same, $500,000. You still put down the same 5% down. Your loan amount is still the same, $475,000. However, now your interest rate is 5% as opposed to 5.5%, with the term still being 30 years and your cash to close being the exact same as the first scenario. But now your monthly payment is just shy of $3,000, which puts your monthly savings almost $150 every single month. And the cost for the seller to do this for you is roughly $9,500. So the seller nets more and you pay less every single month. Because you see, for the seller, they don't have to reduce the price of their home. In fact, they could actually increase it if they want to do this. So you can actually offer more for the property and ask the sellers to give you a credit at closing so as to cover the expense of this buy down. And this is something that happens all of the time. Because remember, loan officers get a different rate sheet every single day, and they charge different amounts for the different interest rates that they give you. So if a loan officer actually gives you a higher interest rate than what you can realistically obtain in the open market, the cost of the loan will actually be less. And in most cases, the loan officer will actually credit you for taking that higher interest rate. But that's not what we're doing here. What we're doing here is doing the opposite. We're doing a buy down, meaning that we're actually paying to lower the interest rate that we get, but we're actually asking the seller to pay this for us. So we as a home buyer don't have to come out of pocket an additional $10,000 in order to do this buy down. So if you're looking to purchase in the Dallas-Fort Worth Metroplex, or heck, anywhere in the country, since we're licensed in all 50 states, then feel free to reach out.